having assets is not the same as having access to cash when it's needed. So we know that retirement accounts might create taxes, and even investment accounts. Again, you can put beneficiary designations on a lot of these things, but what if I have to sell assets that are decreased in value because I need to pay funeral expenses? Real estate can often take a lot of time to sell. Pension income just may stop altogether if one of the spouse passes. Life insurance, assuming we have proper beneficiary designations in place, can provide those immediate funds, and in most cases is going to be tax-free. Welcome to another episode of the Simply Retirement Podcast, where we want to educate and empower women to live your retirement on your terms. I'm your host, Eric Blake, practicing retirement planner with over 25 years of experience, founder of Blake Wealth Management, and I would not be the man I am today without the women in my life. Joining me once again is Wendy McConnell. Wendy, how are you?
I'm good. How are you?
Good. So I got a quick question for you on the pickleball front.
Oh,
so
okay.
do you play outside or do you play inside?
I'm a member of an inside organization, but I also play outside. Not this time of year, but
right.
Are you all outside all the time?
No, there's a court like a mile and a half from us that's outside. That's really nice when it actually is warm. But for the most part, I'm actually inside. We've got I don't know do they have pickler up there?
That's exactly what I'm in. Yeah.
Awesome. Yeah. So we got a pickler that's not too far as well. So
yeah, they just opened a year ago, and I'm just thrilled. I'm over the moon with it. I'm like, it's worth every penny. I just love it. I love it. But we also got 4 brand new courts in our neighborhood.
Nice. Okay.
So I'm sorry, you should never bring up pickleball because I'm just going to light up like a firefly.
It was my fault. I'll acknowledge that. It's all right.
Okay. So, yeah, there you go.
Awesome. Well, in our episode today, I'm going to refer back to episode 93, which just a couple episodes ago that we did with Lisa Rayberg to discuss life settlements and how life insurance policy that you no longer need or want, or maybe just can't afford it any longer, could potentially be used through a life settlement. But as I was thinking about that episode, one of the things I said, hey, you know what, if we're evaluating options like that, the first question we really have to think about is, do I still need life insurance in retirement? And of course, the honest answer is it depends.
Of course.
So today, we're going to walk through how to think about that decision, what changes in retirement, and what circumstances might create the need for life insurance. And actually, to help you think through this, we're going to include a very practical checklist in the show notes, a link to in the episode summary titled, "What issues should I consider when reviewing my life insurance policy?" And it's really designed to help you evaluate whether your coverage still fits your situation. So as always, for the links and resources that we're going to be sharing in the episode, you can visit thesimply.retirementpodcast.com. So here's where I want to start. So ultimately, the primary purpose of life insurance during your working years is to bridge the gap between, whether partially or fully, to bridge that gap between where you are today and financial independence at some point in the future. It's usually about trying to protect your plan while you're still building it. So if income stops unexpectedly due to a premature death of a spouse, life insurance helps continue progress towards financial stability for the surviving spouse or anyone that might be financially dependent on that individual. So that might be replacing income for the spouse. It might be paying off a mortgage, making sure that children can still go to college. So during your working years, those financial obligations are often much higher, and full financial independence has often not been reached yet. So again, that's where life insurance steps in to fill those gaps. And it obviously plays a really important role during this stage of life.
Gotcha.
But then as we move closer to retirement, or once you're already retired, many of those original reasons don't really apply any longer. So you may not rely on earned income as much or at all at this point in your life. Your mortgage may be paid down or even eliminated. We hope, at least, that your children may no longer be financially dependent. That seems to be, a stressor these days for many people. But in general, hopefully your children are no longer financially dependent on you. And ideally, you've reached, or at least very close to reaching, financial independence. So because of that, the need for life insurance often changes, but that doesn't automatically mean that it's disappeared. So in certain situations, you might be keeping an existing policy that might make sense. In other situations, it may not. And there are also certain cases, depending on the purpose, where you might even choose to purchase a new policy in retirement. So from my perspective, the question isn't really, should I have life insurance in retirement? It's really what circumstances would create the need for life insurance in retirement. And that's what I want to cover today.
Okay. Sounds good. The only benefit I see, and I'm just putting my 2 cents in here.
Please.
It seems that life insurance is just a quicker payout. Like it's not something that you have to wait for as long as you would like through a will and probate and all of that kind of stuff. But I don't know if that's a good enough reason to stick with it.
That's a huge advantage of life insurance. And I think that's really where what I want to share next is walking through some different examples where that exact reason would be why you might think about having life insurance in retirement.
Wow, I am smart then, huh?
Very smart. But when we think about it, here's some of the situations that I've seen quite a bit. So here's one, for example, where maybe most of your assets are held in retirement accounts like an IRA or 401k. Now, again, these accounts will usually have beneficiary designations, so we're not necessarily worried about probate. However, the withdrawals are typically going to be taxable. And so if funds must be accessed pretty quickly to cover funeral expenses or maybe end of life medical bills, that can trigger a pretty significant tax burden depending on the circumstances. So then we think, okay, life insurance proceeds are generally received. Also, here's an advantage, and you may have touched on this when you brought this up, but also knowing that life insurance proceeds, the death benefit is typically tax-free. So it provides immediate liquidity and it avoids some of those tax consequences that you might be worried about. There's other situations where maybe there's a pension involved. Where I've seen it with our clients is military pensions. So just an example, the maximum survivor benefit for a military pension is 55%. And in many cases, I've seen where no survivor benefit was chosen at all. Now, sometimes that decision made sense at the time because you never know fully what those circumstances were. But we unfortunately had a client who was widowed not too long ago, about 2 years ago now, and there was no survivor benefit on that military pension that the husband was receiving. So she basically at this point, because of her age, she's not yet eligible for survivor benefits from Social Security. She's now fully dependent on her own income, on her own ability to earn income. So fortunately, she does have some healthcare benefits through her marriage. But again, because of her age, she's fully reliant on her own income because, again, no survivor benefit, and she's not old enough for Social Security survivor benefits. And actually, this creates she's doing well, but that can definitely create some financial strain.
Okay.
And again, it's not to try to criticize these past decisions because you just don't know what the circumstances were at the time. But this is a scenario where, hey, if you knew that in advance, you knew there wasn't a survivor benefit, or you knew it's going to be a reduced survivor benefit, that's a situation where, hey, maybe we do need life insurance. Because we do have another client situation where it's very similar. There's no survivor benefit, but we've done exactly that. We have a permanent life insurance policy in place to fill that gap. So that's a perfect example of where life insurance in retirement may actually make a lot of sense.
Okay.
And same thing with Social Security. If you've got two spouses who are primarily dependent on Social Security benefits, again, depending on the circumstances, we always know, we've talked about this on multiple episodes, that when one spouse passes, one of those benefits is going away. So that might still also be a situation where life insurance might play a role. Now, the other thing I've seen is that more couples and individuals are carrying mortgages into retirement.
Yes.
And that's a same situation where if an income change happens or your income gets reduced, that mortgage can quickly become a burden for that surviving spouse. And so again, that's where we want to evaluate, does life insurance make sense? And we'll talk about the types of life insurance here in a bit, but that's really where, again, talking about what the need is first before determining what the solution might be. Hey everyone, it's Eric. Hope you're enjoying today's episode. I want to take just a quick moment to share a resource I think you'll find valuable. Have you ever found yourself asking, how much can I put into an IRA this year? Or how much can I earn before my Social Security gets reduced? Those are the kinds of questions that come up all the time, and the answers change often more than you think. That's why we created a free 2-page tax and retirement planning cheat sheet, updated for 2026, with the key tax, Social Security, and retirement numbers all in one place. You can download it right now at the simplyretirementpodcast.com/retirement cheat sheet. It's a simple reference you can keep handy whenever questions come up. Now, back to the episode.
Yeah, I think it's pretty common now for people to carry their mortgage because everything's so expensive.
Exactly. And that's where, obviously, that's where retirement income planning comes in and say, okay, well, for the first 5 to 10 years, whatever it might be of our retirement, we know we're going to have more income, part of that being allocated towards the mortgage, with the assumption that at some point it gets paid off. And now we can reduce our withdrawals or whatever the case might be. But you're exactly right. There's so many that might even buy a new house when they transition into retirement. They may never expect to pay that off.
Yeah.
But if you lose income because of a loss of Social Security or loss of pension, that is where life insurance might play a huge role.
Gotcha.
Then we talk about the importance of understanding how your assets are structured. And again, which assets might be immediately available because of beneficiary designations or through proper estate planning. But another one that I hear quite a bit is where, a lot of our clients being women that may be widowed or divorced, and that's that desire to not cause a burden to their children or to the family. And that is a very real concern that many of them have. So depending on how your assets are structured, again, we talked about if all your money's in IRAs or there's some tax implications connected to your assets, that's again where life insurance might be an important factor, even if it's just enough to cover the burial costs, the funeral costs.
Right. Yeah.
Just the basics to, hey, I just don't want to be a burden. Does that make sense to have life insurance? Again, depending on how your assets are structured. Because what you're always looking for is, and we'll talk about liquidity here in a bit, but that's kind of what we're looking at. What are the tax implications? How quickly can my family access those resources? And what I'll tell you is this, I want to stress something here. Adding your child, a family member, or anyone else as a joint owner of a bank account is almost never the right solution, right? Because it's a very easy way to lose control. And perhaps maybe more importantly, it can unintentionally disinherit someone that's very important to you. So that's usually not the solution. There are better ways to structure things than actually putting somebody as a co-owner on your bank accounts or any type of account, really. And again, that might involve proper beneficiary designation, making sure you have a well-drafted estate plan, or as we're talking about today, potentially using life insurance in that role. Again, even if it's just simply enough to cover funeral costs so your family doesn't have to step in financially to cover that burden.
Okay.
And then speaking of estate planning, this also can be an area where life insurance might be needed. Now, based on our current tax laws, fewer individuals and families are impacted today because of the higher estate tax exemption. So in 2026, there's an exemption of $15 million. So unless you've got more than a $15 million net worth or gross estate taxes probably aren't an issue.
I'm just under that number. Yeah.
Well, good. I'm glad to hear that. So we don't have to worry about life insurance for you in that case, right? But there are people out there that are impacted by this, and estate taxes obviously create a significant liquidity need. And in some cases, life insurance may be able to be used to cover some of those estate taxes rather than having to sell certain assets that again, the market may be down, there may be tax implications, anything like that. And we're actually going through a case like that with a client right now where, again, there's some circumstances we need to prepare for. And that's really, that's a really deeper estate planning conversation than we want to cover today. But if you think this might apply to you, that's where you really want to think about speaking to your financial advisor or to your estate planning attorney.
Okay.
So if you step back and look at these situations, we're talking about retirement accounts, we're talking pensions, Social Security differences, mortgages, estate taxes, or just simply not wanting to burden your family, the theme is liquidity. Having assets is not the same as having access to cash when it's needed. So we know that retirement accounts might create taxes and even investment accounts. Again, you can put beneficiary designations on a lot of these things, but what if I have to sell assets that are decreased in value because I need to pay funeral expenses? We know real estate can often take a lot of time to sell. Pension income just may stop altogether if one of the spouse passes. Life insurance, assuming we have proper beneficiary designations in place, can provide those immediate funds, and in most cases is going to again be tax-free. That's important to know. I think it's very important to just pause here on something, and that is that in most cases, the death benefit paid out to your beneficiary from a life insurance policy is tax-free. Now, this doesn't mean that there may not be other assets that provide some similar tax benefits. In fact, may be tax-free depending on the circumstances, but it has to be the right situation. And usually there's some other trade-offs or there's other risk associated with that. I mentioned market volatility just a bit ago. If I've inherited an investment asset, there might be potentially tax-free benefits from that investment. But what happens if the market's down 20% at the time that I need to sell those in order to provide for funeral expenses or end-of-life care, those types of things? So that's really where life insurance can play a huge role. So life insurance in retirement is often less about the building of wealth, and it's just more about creating liquidity at the right time when it's needed. So obviously, once you understand the purpose of life insurance, the next question becomes what type of coverage makes sense? So there's term life insurance that might be appropriate if there's a temporary need, such as, again, we've talked about the mortgages, might be protecting a surviving spouse until the mortgage is paid off. Maybe you have a 10-year term policy that's tied to the time frame of the mortgage getting paid off. You might need permanent or cash value policies. That might be considered when the need is ongoing. We talked about a pension, for example. If that pension is providing lifetime income to one spouse but stops at the death of that spouse, that might be a situation where we really need a policy that's going to last for lifetime. Or if, in fact, again, we talked about estate planning. If there's an estate planning need, that might be a situation where a permanent or cash value policy might be more appropriate. And I think the first thing always to know is that the focus is not going to be on the product initially. It should be on the specific risk or circumstances that we're trying to address.
Okay.
Also determining the right amount of coverage. So then we can determine, once we know the right amount, we know what our risk is we're trying to solve. What do we know the problem is we're trying to solve? We know the right amount. Then we can start looking at what the right type of product might be. And to me, this is really where it becomes critical to work with a trusted life insurance professional. And we, again, as we discussed on a couple of episodes recently, life insurance is just unfortunately one of those areas that so many get taken advantage of, either because they're buying too much insurance or they're buying the wrong kind. Because insurance has historically been a commission-based product, so obviously there's some inherent conflicts of interest that can pop up there. As we get ready to wrap up the episode, again, it's important to understand that life insurance plays a very important role during your working years, primarily bridging that gap between where you may be today and financial independence at some point in the future. In retirement, that gap might already be closed, or it might be very small. But there's still certain risks that may exist, especially when we're talking about replacing income sources like pensions. If we're dealing with tax situations, we're dealing with liquidity, housing stability, estate planning, or again, even if that's just that desire not to burden your family. So the right answer to, do I still need life insurance in retirement, really depends on your circumstances. And as I shared at the very beginning, we're going to share a checklist that I think will be really valuable for many out there. What issues should I consider when reviewing my life insurance policy to help you think clearly about making the decision of, is this policy, does it still fit my needs? Is it still meeting the objectives? Is it still going to be important when I'm in retirement? Or do I need to look at some other possible options with this policy? Any other thoughts or questions, Wendy, before we get ready to wrap up?
Well, I think one thing to maybe keep in mind is the older you get, the more expensive insurance becomes.
And again, that's one of the things we're talking about, reviewing existing policies,
right?
Looking at costs, looking at, if you don't really need it anymore, because if you've reached financial independence, maybe there's very well no longer a need for that policy. Could I cash that policy in and receive whatever cash value there might be? Or can I say just cash flow? Just simply saying, if I don't really need the policy, do I want to continue paying that premium? So that's where it becomes important to evaluate your existing life insurance policies in the context of, do I still need it? What purpose is it serving? And what other options might I have, like a life settlement or simply cashing it in? Or if I really do feel like I need it because of some of these issues or examples we shared, you might need to continue paying that policy simply because it is going to be there when the need comes.
Well, and that's the thing. It's, we have to remember insurance is for just in case. And if any kind of medical issues come up, then it's going to be even more difficult to find a policy that will be reasonably priced.
Right. And that's really where the advanced planning really becomes in. I think it's interesting to note some of as you're reviewing your policy, what other features might it have? There are some different policies that offer terminal illness waivers. Also, in thinking of, if you're looking at life insurance, back in, I believe it was episode 11 with Dina Mabry, we talked about these hybrid long-term care life insurance strategies as well, where you get a life insurance policy that has a long-term care benefit. But you're exactly right in thinking about, based on my age, based on my health history, and if getting a new policy is something I need to consider, that's really where you got to understand what the options are and what's available to you at that time.
Okay, noted.
Well, excellent. As always, thank you for tuning in. Thank you, Wendy, for joining me once again. If you're looking for a personalized retirement plan that helps you make thoughtful decisions around things like life insurance, income, taxes, as you move through retirement, you can visit getmysimplyretirementroadmap.com to schedule a call with our team. That's it for today's episode. Again, for all the links and resources mentioned today, you can visit the simplyretirementpodcast.com. Don't forget to like, follow, and share the show. Until next time, please remember, retirement is not the end of the road. It's the start of a new journey.
That's it for today's episode of the Simply Retirement Podcast. We hope you found our insights and advice helpful in planning for a fulfilling retirement. Don't forget to take action on what you've learned today. Visit our website at blakewealthmanagement.com to learn more about our firm and review our Simply Retirement Roadmap process to get you on the right path to the retirement you deserve. And don't forget to click the follow button to be notified when new episodes become available. Thank you for joining us on this journey, and we look forward to helping you achieve your retirement goals. Remember, retirement is not the end of the road. It is the start of a new journey. So embrace it and make the most of it. Until next time, take care. Content here is for illustrative purposes and general information only. It is not legal, tax, or individualized financial advice, nor is it a recommendation to buy, sell, or hold any specific security, or engage in any specific trading strategy. Results will vary. Past performance is no indication of future results or success. Market conditions change continuously. This commentary reflects the personal opinions, viewpoints, and analyses of Blake Wealth Management. It does not necessarily represent those of RFG Advisory, their clients, or their employees. This commentary should not be regarded as a description of advisory services provided by Blake Wealth Management or RFG Advisory, or performance returns of any client. The views reflected in the commentary are subject to change at any time without notice. Advisory services offered by investment advisory representatives of RFG Advisory, a registered investment advisor, Blake Wealth Management, and RFG Advisory are unaffiliated entities. Advisory services are only offered to clients or prospective clients where RFG Advisory and its representatives are properly licensed or exempt from licensure. No advisory services may be rendered by RFG Advisory unless a client agreement is in place.